August 28, 2019. So in this video, I'm going to break down my full trading day that I had on August 28, 2019. Now, once again, just to refresh everything, keep in mind that whenever you guys start a new trading day, you always want to make sure these things are done. You're always starting with market direction, what is happening with the overall market. Then once you understand what's happening with the overall market, you want to understand, are there any pre-market movers or is there any catalyst? Right now, that also depends on what your trading style is. Are you looking to trade companies like BPTH, companies like Seal, or are you looking to trade companies like Apple, Tesla, and so on, right? And obviously, both stocks that you trade are going to be a little bit different. So at this point, I'm just trading the bigger name stocks. I'm not trading PPTH. I'm not trading the Seals. I'm trading the bigger name companies. So those companies are stocks that I have a consistent watch list of, and I just keep trying to trade them over and over and over again. Now, once that's done, you go on to your watch list, you create a focus list, and then you have a game plan set up. Now, just to update you what happened in August, August was a very, very choppy month. For anyone that remembers August 2019, you guys probably remember how choppy and how hard that month was. So that was by far one of the worst trading months of 2019. Not like for me overall, but I think just kind of trying to predict the market or trying to trade the overall market, because there was a lot of sloppy price action movement, right? Now, understanding that and feeling that out, you as a trader, what you should be doing during times like this is you should either size down, right? Or you should take a step back. What a lot of people do wrong in times like this is when the market gets sloppy, market gets messy, they size up because they haven't really made money. So the month of August was not a very profitable month for me, right? But I understand the idea that not every month is going to be the same. So I'll have a month where I'll make 100, 120, 140,000. Then I'll have a month where I only make 20 grand, where I only make 10 grand, right? And that idea of not kind of replicating last month's success, you have to understand that that's not going to happen every month. And that's one thing I want you to take away from this video, and I'll get to the end and I'll explain what the main factors I want you to take away are. But that's one main thing I want you to take away, where not every month is going to be replicated. So if you have a month like last month, let's say you made 10,000. Don't expect that this month you're going to make 10,000. Don't expect that this month you're going to make 20,000. Go day by day and see what the market gives you. Like I mentioned, look at how messy this was. Now, if you look at the overall market, you can see clean price movement up, clean price movement down, clean price movement down, clean price movement up, clean move up. And then they got sloppy. So if every month here you're making 10,000, 10,000, 10,000, here you only made, let's say 1,000, or even if you were red 1,000, that's okay. It happens. But what you don't want to do is you don't want to make 10, 10, 10, 10, 10, 10, and then this month you lose 50,000 because you were trying to replicate that same amount, right? So at this point, I understand that. At this point, I know what's going on with the overall market. So what I did is I started sizing down. I started playing with less money. I started investing less money into the market, understanding that it's very, very choppy and it's very hard to catch certain moves, right? So this was my trading day for the day. So this day I made about $1,300. Now, this was not the best trading day, even though it was green. And I've mentioned this to you guys a million times, that even if you have a green day, that could be a terrible trading day. So even though this was a green trading day, my trade rating on this is still a 2. It's a terrible trading day. Like like when I go back to these trades, and I look through each one of them, I kind of see how terribly I traded, right? And you know, when you look at the numbers of trading, and this is why having a journal, this is why going back to your trades are also very important. When you just look at a trade from face value, or when you look at a day from face value and you see green, you automatically think, great trading day. Wow, it's green, great trading day. And whenever you see red, you say bad trading day. No, I want you guys to eliminate that idea, right? Don't base a trading day. Don't say a trading day was good or bad based on you making money or losing money. Once again, there's days I've lost money and my trade rating was probably a 7 or 8. There's days I've made a lot of money and my trade rating was a 2 or a 3, right? So the trade rating that you guys give yourself should not be based on how much money you made or how much money you lost, if you're red or green. It should be based on your executions. Execution, execution, execution. Keep that in mind. I want that cemented into your head. Make sure it is about executions. So now these are my executions on these stocks. Now my executions, personally, I think were terrible. I think they were legitimately very, very bad executions. Even though I walked out green, great, phenomenal, worked out in my favor. But I think there were a lot of entries I took that were not good. And I also think I overtraded. So with Apple, I didn't have the best entry points and I sold way too early. Baba, I sold way too early. Sloppy trading on NVIDIA. I overtraded with Amazon. And overall, I had a bad trading day. But one thing I did like about this trading day is that I sized down. I'm happy I sized down. I'm happy I didn't trade with 100 or 200 or 300 contracts like I usually would with a stock like Apple. So since I sized down, I think it made it a lot easier. Now, some people might have said, oh, well, if you sized up, your profits would have been more. No, if I sized up, it would have been easier for me to get shaken out too, right? Now, this overall day, once again, was not the best day. It was, even though it was green, I think it was a terrible day. I think I should have sat this day out, even though it was green, but it is what it is, right? So now what I'm going to do is I'm going to go to the charts and I'm going to break down each stock one by one and show you guys where I got in, where I got out, what I did bad, what I did good. And the main thing I want you to take away from this video is not really like the entries or exits, but the psychological factor that went behind this day. Because like I mentioned, there's a lot of psychology that goes into trading. So that's why I don't want to just show you, oh, look, I made $1,300. Hey, look, I made $20,000. Great, do this. No. Hey, look, I made $1,300, but this was a bad day. Hey, look, I made $1,300. This was my mindset. Even though I made money, cool, it's green, but it was still a bad day. I got lucky. This day is a day where things just worked out, where in the long run, if I trade like the way I traded here, it wouldn't work out. So this is just to kind of give you guys a little sneak peek, so it reduces the learning curve, right? So you guys understand that days like this happen. You guys understand how to tackle these type of days. You guys understand what to do, and you guys, like, I don't want you guys to go through this, lose money over and over again, and then experience it. I want you to see it happen, even to someone that's been trading for about 5+ years, that they have days like this, and then how to handle it, what to do. Right? And then once again, the biggest thing you guys can do when you have days like this or weeks like this or months like this is just size down. Simple, size down, right? So, all right, let's go to the charts and let's start off with Apple first. All right, so let's check out Apple. Okay, let's go through the full play and then I'm going to show you where I entered, where I exited, and where I could have done better, okay? Now, when you look at Apple right here, let's just break it down on a little larger time frame. Let's look at a 15-minute time frame. Now, first and foremost, like I mentioned before, that we should always, whenever we're looking at a stock in the pre-market, one thing we want to get is the pre-market lows and highs, right? Now, those pre-market lows and highs play a very, very important role, right? So we have the pre-market lows and then we have the pre-market highs, right? That's number one. Other two levels that play a very, very huge role are yesterday's high and yesterday's low. So that's yesterday's high, that's yesterday's low. Now, I'm not going to really place this low because this low is very similar to the low of the pre-market. So I'll just remove that. Now, the idea of having this is if this stock breaks 2 or 3, let's say Apple breaks 2 or 3 today, it is outside of yesterday's range and it is outside of today's pre-market area. So that itself is showing us that this is moving in some sort of direction. Now, usually when a stock stays in a range, that's not a good thing. There's usually never any play. So for example, if let's say we take the past few days, right? Right here, this is the range. You can see the high of the day, the low of the day, right? When we have the high of the day and we have the low of the day, you can see the next day, that's the pre-market. So the next day, the moment Apple broke this area, it is now outside of yesterday's range and it is also outside of the pre-market low, showcasing that there's a potential move. And you can see Apple moves from about 208 all the way to 201, makes a 7-point move down. Now, obviously, whenever it gets outside of that range, it's not always going to make a 7-point move down, right? Or such a huge move, but it is showing that there's some sort of direction. Okay, now let's say we take this example, right? We have the high of the day and we have basically the low of the day, right? Now the next day you can see stock stays in between that range. It also stays in between the pre-market low and high. Basically means that the stock is most likely going to be ranging if it stays in between that. And look, that's exactly what happened, meaning that there was no potential play. Stock traded sideways, very sloppy, no real direction. Okay, now that's why having those pre-market lows, pre-market highs, yesterday's high, yesterday's low is very important, because it just shows us if that stock has kind of, you know, started showcasing a move, basically trending up or trending down. So once again, we get our pre-market low and pre-market high. Now I do this with every big name stock. So if I'm trading any big name stock like Apple, Microsoft, Amazon, and so on, I like to establish these levels, right? Just to know what the range is. Now, if I'm watching Apple for the day, and Apple is my main focus stock, I will go through Apple's chart. I'll apply this just to kind of check it out myself. Just so when the market does start, I kind of know what's going on. So that's with Apple, okay? Now, next thing we want to make sure is SPY. SPY is something that we always want to make sure we have everything applied. We want to understand what's going on. Now, looking at SPY, let me just put SPY here for a second. Now, looking at SPY, right, a few things you guys want to understand before the market opens is you want to know what's going on pre-market. When we look at pre-market, same concept, right? You want to do with SPY. Yesterday's high, yesterday's low, right? Pre-market low and pre-market high. All right, so same exact concept, same exact everything, just to kind of get our range going, just so we understand what's happening, right? So now once that is done, right, now I'm kind of ready to go ahead and trade the day. Now, typically when I trade, what I like to do personally is I like to have everything open, such as, like, so on my screen, and you guys are going to see as we move forward, I like to have one full screen that shows me the market internals, that shows me what is happening with the overall market, what is happening, right? So when I look at one screen, I have SPY, I have ADD, I have VIX, I have a trend, I have all these things open so I can understand what's happening with the market. And then when I'm looking at other stocks, I have a 1 minute open and then I have a 5 minute open, right? So if I have Apple right here, obviously I can't show you guys all the screens, but I would have 1 minute, 5 minute, 1 minute, 5 minute, Apple 1 minute, Apple 5 minute, Amazon 1 minute, Amazon 5 minutes. So I would have that set, right? Just so if there's a play, I'm kind of ready to go ahead and attack. Now, once our levels are done, we are ready to go ahead with the market. So what I'm going to do is I'm going to hit play and start the day. So I'm hitting play, and now price action is going to start moving, and the market is about to open in any second. Now I'll show you guys where I entered, where my entry was, where I exited, and what happened. Okay. So now starting this, as you guys can see, stock is moving. Now, like I mentioned a bunch of times, don't trade right on the first minute, guys. Don't go and trade right away. Wait a little bit, be patient, wait for the play to come to you. Don't force a trade. Now, obviously, that's where I kind of messed up with this trade here. I'll show you guys that. Let's look at ADD2. Let's zoom in ADD. So let's look at all the market internals and let's try to read them as much as we possibly can, right? So when we look at everything here, what do we see happening? We see VIX is going up. We see SPYs pushing down. We see ADDs pushing down. So far, when we look at this so far, let me pause this for a second. What's happening right here, guys? Let me make this a 1 minute. What's happening right here so far is we see that the market is getting weak. VIX is going up, showcasing that fear is increasing, right? ADD is going down, showcasing that there's more declining stocks than advancing stocks. So the volume on most stocks are declining than advancing, okay? So what this is representing, what this in front of us is representing at the moment, is that the market is weak, okay? Now, as the market is weak, that is giving me an indication that I can go ahead and maybe enter as puts or short the stock, right? Now, a few things I want to bring up. First thing, seeing this does not mean that the market is going to keep going down. Remember, this is for right now. Like right now, the market looks weak. That could be for the next 5 minutes, next 10 minutes, next 20 minutes, next 4 minutes, next hour, 2 hours. So what you want to understand as a trader is you want to understand, how are you entering this trade? Are you scalping, right? So in this situation, my main focus is to scalp or day trade the stock for maybe a few minutes, 5 minutes, 10 minutes, get in, get out. So with that mentality, you have to be ready to attack. Okay, so that was my mentality. Like, hey, get ready to attack. Now, what I didn't like, as I mentioned, is I think that I could have entered this a little bit better, right? Now, if I entered this a little bit better, it would have been a lot, like if I entered a little bit later, it would have been a lot better in my opinion, okay? Now, what I would do at this point is, what I think I should have done is I should have waited for SPY to close below 285.5. I think a close below that would have made a lot of sense. Right now, it does not make any sense because this could immediately reverse. So what I did is, this is where I entered. I entered on this candle. I got in the 202.5 puts. That's my strike price, 202.5. So I traded options, right? And I got in at the 202.5 puts. So let me just show you guys that real quick. So if you guys take a look right here, I traded the 202.5 puts at 189. I bought in at 932.13. That's when I got in 2 minutes into the market. Not a great entry. I think it was too early. I usually sometimes like to wait 5 minutes in. So I think I kind of rushed that trade. So I think that trade was once again kind of rushed. And if I waited, it would have made a lot more sense. So that was my first entry. Now let's play and see what happened. So that was my first entry. I added 30 contracts. Okay. Now, a few minutes later, I added more, and I'll show you where I added more and why. Now you can see ADD is pushing down, showcasing that there's more declining stocks. SPY is also pushing down, and it's just showcasing that the market is not looking that strong for these few minutes. Okay, so now let's just watch and see what's going on. Okay, so you can see what's happening. This is why I don't like trading the first few minutes, because a lot of choppy price action. And this is the 1 minute, guys. I'm not a fan of just trading the 1 minute. That's why looking at the 1 and 5 is very, very important. Now, we're going on to 9:35. The first 5 minute candle is about to close. Now, what do we see here so far? Let's pause and let's take a look. I'm going to pause in a second, and I want you to see now, what do we see here? Now, the first 5 minute candle closed, right? 5 minutes are done. We're at 9:35.06. Now what we see is the market is bleeding out. Market is going down. VIX is going up. ADD is also going down. So what this is showcasing, 1, 2, and 3, is that the market is still weak. That a lot of times gives me the confidence to scalp a trade. So what that means, and I want you to understand the idea of scalping, and that's how I'm trading a lot of times, is right now I have the confidence to enter in options for this, get in and get out. Because of this. This is giving me the confidence. This is showcasing that, okay, the market is looking weak. ADD is also going down. VIX is going up, showcasing fears going up. And obviously, Apple right now is looking pretty weak. So that's giving me confirmation to scalp. Now, yes, obviously, a strong entry point would be below 203.09 or below 203. But remember, I'm scalping, so the idea of scalping would be to get in and get out, right? Because everything looks weak. So let's keep going forward and see what's going on. So at this point, I added 30 more contracts. So I added 30 more contracts at 9:35. Then at 9:36, I tried to exit my position. I only got filled on 6, right? So at 9:36, which is right here, I tried to exit more, but I wasn't able to get filled. So I only got out 6. So that was one of my exit points. I took some profit off the table. Okay, so I took some profit off the table right here. Now, when we keep progressing, right, 9:37, I took a little bit more off. Right, now let me pause and let me show you guys this on what I think I could have done better. Now, when we go right here, you can see on 9:37, I took 30 contracts off. I took 30 more contracts off, right? Now, the reason I did that was, as you guys saw, that green candle, that kind of shook me out. Also looking at SPY, showcasing a small reversal. Also looking at ADD, showcasing a small reversal, small pullback, I'd rather say. Kind of scared me out a little bit. And remember, I was scalping. So I already made money on the trade. You can see entered at 183, 199, got out at 208, 203. So I made about 10-20 cents on the trade, which as of right now, I'm happy. Now, I haven't exited my full position until now. I'm still holding some of my position. I still have about 30 contracts at this point. So as this keeps moving, you can see Apple is bleeding out. SPY has a small pullback, and now looks like it's continuing. Now, a few things I want you guys to understand. If this can break, if SPY makes a new low of the day and it breaks the pre-market low and it breaks yesterday's range, there's a very high possibility it's going to keep going down. With combination of ADD, it'll be a very, very strong move down. So at this point, it becomes that same waiting game. And at this point, I'm still in 30 contracts. So I still have 30 contracts. I have 30 puts, meaning I make money when or if the stock goes down, right? So let's keep watching this. Just to keep it fast forward. Now, like I mentioned, when you guys are taking on these trades, keep the 1 and 5 on together. Don't just trade solely off the 1 minute chart, right? Don't just trade off the 1 minute chart at all. Make sure you are trading the 1 and 5, right? So what I'm going to do is I'm going to replace this with SPY, right? Let me replace that with SPY, and I'm going to make this Apple's 5 for now, just because I can't really showcase everything. Now, if you look here, I like to once again use a combination of both and see what's happening. Apple is making a new low of the day. ADD made a strong push up, but now it's going down again. SPY is holding right at this 285 level, which I don't like. So once again, I'm scalping. I'm looking to trade. I'm not holding this stock. I'm not falling in love with it. I'm looking to scalp. So Apple's making a new low of the day, right? SPY is holding flat. Now, a few things I didn't like with Apple at this point. It's going down to its low of the day or pre-market low, but the market is not, as you guys can see, the market is not working in my favor. ADD is also going up, showcasing that the market is somewhat gaining momentum. Now, at this point is where I exited right here at 941. Let me pause that. 941 is where I exited my last position. You can see 941. I sold my remaining position on Apple. Now, the reason I got out here is, as you guys can see, what's happening right here. Now, this is where you as a trader need to kind of make sense of stuff, okay? I want to break this down and pay attention. This is very important. This is going to save you from a lot of mistakes and save you from losing a lot of money because you're understanding what's going on. Now, when you're trading big names like Apple, you want to make sure the market internals align. If the market internals are not aligning, everything is just not going to give you the highest probability. So in this situation, you can see Apple is pushing down. Phenomenal. That's looking great. SPY is holding at a very, very critical level, right? Very clean, critical level. Now, since this is a very clean level and SPY is holding, ADD is pushing up, I'm not comfortable in taking this trade. I'm not comfortable being in this trade, which is why at 941 I got out. Now, the reason for that is Apple, yes, it's selling off, but Apple is still going right into its support level at 203. That's the pre-market low. It's going right into that with the market holding flat, with the ADD going up. That itself is not giving me confidence. Can Apple break 203 and go down? Yes, there's a possibility. But looking at the probability aspect, there's not a high probability of that, right? The probability is not strong, right? So that's not giving me the confidence. The confidence is not kicking in there. Now, if SPY broke 285.5 and kept going down, ADD looked good as it did on the open, I would stay in my position and I would ride it all the way down. But looking at this so far, it's not giving me that confidence that's needed. That confidence is not needed at all. And that confidence isn't present at all, which is why I exited. So what we're going to do is we're going to forward. So at this point, I'm completely out of my Apple trade. And let's see what happened. And then I'm going to recap this trade and go on to the next trade. So I'm going to 12:42 p.m. just to recap what happened. You guys can see what happened on that recap. Right at 9:44, Apple started reversing, right? And you can see my exit 941. I got out. Now, if I didn't get out, I would have taken a hit. I would have taken a major hit. Now, the reason I got out, once again, as I was mentioning, guys, you have to focus on a few key elements. Number one, ADD is showing strong, healthy volume kicking into the market, right? Besides ADD, look at SPY. SPY bounced right at its support level, right? So even though Apple is bleeding out at the moment, a lot of people would have held through that trade. But looking at the market internals and reading the strength of the market looked very weak. Since the market looked very weak, I was not comfortable holding it, and that actually saved me from this trade. Now, if Apple kept going down and the market looked strong, I would have been okay with that trade because the probability did not look strong. So a few things I liked about this trade. I liked that I actually followed the market and I got out. Right, I really like that. I really listened and I got out. What I did not like, I think my entry was way too early at 932. I think my second entry was good. I liked my second entry at 935. I had good confirmation. Market was looking weak at that point, right? So that's one thing I liked. What I didn't like was just this entry. I think that entry was too rushed. It was too quick. And also I like the fact that I actually followed the market. I listened to the overall market and I got out when I should have gotten out, and that actually saved me from losing a lot of money. So this was my Apple trade, okay? Now, let's go to my next trade. Let's go to the BABA trade. Let me go to that timing. Let me go to pre-market, okay? And let's go to Alibaba. So the next stock I traded this day was Alibaba. Now, obviously, we kind of seen what happened with the market same day, but now let's look at BABA. Now, a lot of times when I'm trading, I'm not trading more than one stock at a particular time, right? I trade multiple stocks. So when we look at BABA, let's see what is happening with Alibaba. Now, Alibaba, same thing. Yesterday's range, today's pre-market low, pre-market high, right? Also looking at the overall levels, these are the levels I have for Alibaba. So now what we're going to do is we're going to play and we are going to look for a trade. And I'm going to go on the timing that I took on this trade. Right, let me go on the timing I took on the trade and let me break that trade down. Right here. So now with this Alibaba trade, where did my trade kick in? So looking at this, my Alibaba trade kicked in at 9:48 a.m. Right, I bought calls at 9:48. I added more at 9:54, and then I got out the next few minutes. So let's look at this. Let's go to 9:48. So 9:48 is where I got in. This is 9:48. I got into calls right here. Now, a few things I liked about this trade. At 9:48, the market also looked very strong. So I liked that entry. I liked this strong entry. I saw volume. I saw BABA going up. So that gave me the confidence to get in. It also broke this level right here. VWAP was also looking very strong. When the VWAP is sloping up like this, guys, it's showcasing that this is strong volume. Volume is in direction with the stock price. Now, when the VWAP gets flat, slowly gets flat, this is not perfectly flat. It's still sloping up a little bit. But when it gets flat, that showcases that the stock and volume are not matching, right? This is showcasing that there's a lot of volume kicking in, and that's pushing the stock up higher, which is a good sign. So my first entry at 9:48, really like that entry. Second entry at 9:54 was right here. Really like that entry too. Now I got out at 9:56. I think my exit point was too early, right? I think my exit point at 9:56 to 9:57 was way too early. Even though I made money on this trade, I still believe that exit was extremely early, right? Even though it kind of pushed down a little bit and continued, I still believe, once again, that exit was early. I could have maybe made a little bit more, but that's okay. Now, my exit was early because of the fact that whole month of August, the market has been very choppy. It's been all over the place. Since it's been choppy and all over the place, it's been hard to get consistent, straightforward moves because the market would reverse very quickly, which is why I exited a little early, but I wasn't happy with that exit point, okay? Now, the next trade I took, right? Next trade was NVIDIA. So let's break down NVIDIA. So NVIDIA, as you guys can see, I took the trade at 10:42. So NVIDIA trade was taken at 10:42. This is where I took the NVIDIA trade. Now, you can see NVIDIA trade was a clear break. I bought contracts right here. I bought call contracts right here. I bought about 30 contracts, and then I got out right here. I think this trade, same thing, I could have done well with. I got out way too early. And this is, once again, the main key takeaway I want you guys to take away from here is not really the trade. But I want you to take away the mindset aspect and what caused me to do this. So looking at this was too fast. Now, like I mentioned, the whole mindset aspect of this is based on what has happened this month, based on what I've seen, that made me react and make my plays a lot quicker. Right now, I like this entry. I think it was a clear-cut entry, but I think the exit was too quick. Now, if I waited, yes, it could have made a little bit more, but I think the downside of this point was I shouldn't have been trading at this particular point. I think the market, at a certain point got very flat, got very straight and dry, and I was still constantly trading, right? You can see, yes, the market pushed up around 11-ish, but at the point I traded, it got pretty flat. You guys can see 1040-ish. Got very flat, and I still took on the trade. And the whole idea of taking on the trade was, since I was trading with a smaller size, I didn't feel it as much, so that caused me to over trade a little bit, right? Great entry, but I think there wasn't a real strong case, right? I think usually when I see breakouts like that, even though it looks like a clear-cut breakout, I like to see a pullback and a continuation, because this was not the best entry. And obviously, even if it was a good entry, I think I panicked a little bit too early and I got out, which affected me very hard, right? Now, the next one I'm gonna go over, which is the last one, is Amazon. The next trade I'm gonna break down, as I mentioned, is Amazon. That was my last trade of the day. And where did I take this trade? Now, Amazon, I entered around 11:30, okay? So 11:30 was my first entry, and I exited legitimately a minute later. So this was my entry. Now this is where it became an overtrade. Like, this Amazon trade was a complete overtrade. I scalped, I made 15 cents, lucky trade, not a good trade, terrible trade. So I got in at 11:30, I got out at 11:31, okay? So this is basically where my entry came in. I got in, I got out. Terrible. Like, this was a very bad trade. Now, like I mentioned to you guys, what I want you to take away from this trade, this day, is not this green aspect. I want you to take away the psychological aspect, right? Now, just a few things to recap. And like I said, I'm very repetitive with a few things on purpose, so it sticks with people, right? Such as establishing the pre-market lows and highs, yesterday's highs and lows, just to see if the stock is outside of the range or not. Looking at the overall market, having the market internals aligned. Just like I went over the Apple trade, having those market internals aligned is very important. Now, what I didn't like about this trade, like I said, my first entry point on Apple was not great. I sold a little bit early on Apple. I still liked my exit because I followed the market internals. If I waited a little bit more, I could have made more. But I like the fact that I followed the market internals. So the Apple trade was all right. Next, Baba, I think, was a good trade, but I panicked. I sold a bit way too early. NVIDIA was sloppy trading, and Amazon was over trading. Now, if I go back to this, I think the only two solid trades were these two. I think these two should have not been in the equation, which is why I gave myself a bad rating for the day, right? Now, you can see NVIDIA was my only red trade. Amazon, I made $75. Not a great trade, even though it was green. I got very lucky on that. Now, obviously, if I took those two out, I think these two would have gave me about a $2,000 day, which would have been a little bit better. But overall, despite that, just to go through the psychological aspect, it was a lot of over trading, especially after these two, because as I was trading this month of August was a tough month. And because it was a tough month, it was kind of like, okay, I'm trying to gain momentum and trying to gain consistency, where the best thing to do was to kind of take a step back, which I somewhat did. I sized down because like I mentioned with Apple, sometimes I'm trading 100 contracts, sometimes 200 contracts. So I did size down and I took a step back, right? But overall, having days like this, having weeks like this, you have to understand that, all it takes, guys, is one or two bad trade where if Nvidia really went against me or Amazon really went against me, I would have gave away all my profits by over trading, by taking on trades that did not make sense. So when you guys are trading and going through certain stages, learn where to cut off trading, learn where to stop, learn where to take a step back. Right? And that's what destroys a lot of people, where they start trading, they make a little bit of money, and then throughout the day, they give it back. So make sure you understand that psychological aspect too, especially when you're tracking your trades. And just like I went through all of these trades right here, that's what you should be doing after you make any single trade. And you should see what your mindset was, and you should understand what you did and why you did it, and then go back to it and say, okay, cool, I made money, but it was still a bad trade. I lost money and it was a good trade. And these are things that need to be done in order for you to become a very successful trader.